All right, just for a second, I want you to imagine a world where the government just decides it doesn't want your income tax anymore. Not a single penny. Sounds amazing, right? A total dream. But what if that dream comes with a really, really steep price tag? Today, we're going to run the simulation on this radical idea. What happens if we get rid of the federal income tax entirely and replace it with tariffs? Seriously, picture it. You get that paycheck notification on your phone, you open it up, scroll don't past your gross pay, you're looking at the deductions column and it's empty. Federal tax? Zero. Gone. You keep 100% of what you earned. I mean, wow, it feels illegal. It honestly feels like you just found the ultimate cheat code for money. And this isn't just some fantasy scenario. It's an idea that's been floated by former President Trump as a potential cornerstone for his economic policy. It's been discussed in the context of proposals like the One Big Beautiful Bill Act. The idea is super simple and honestly pretty dramatic. Get the IRS out of your paycheck for good, and instead just tax the stuff coming into the country. So for most people, this would mean an instant, overnight raise. We're talking somewhere around 20, maybe 30%. The actual money that hits your bank account would jump up a lot. So does that mean we all just get a massive raise and live happily ever after? Well, you know what they say, there's no such thing as a free lunch. Right. So if the government isn't taking money from your income, it has to get that cash from somewhere else to, keep the lights on. And just how big of a bill are we talking about here? Well, the U.S. government currently brings in about $2.5 trillion just from individual income taxes. That is a colossal amount of money. So to replace every single dollar of that with tariffs, taxes on imported goods, you'd have to crank the dial way, way up. How high are we talking? Well, some credible estimates, like from the Yale Budget Lab, suggest we would need a universal tariff of roughly 70 to 80%, and that's on basically everything imported into the country. Now, let's see what that number actually does in the real world. Okay, so you're at the store, your bank account is feeling pretty good with all that extra paycheck cash, you go to buy the brand new iPhone, and wait a minute, the price tag isn't $1,200 anymore. Now it's over $2,000. Suddenly all that extra money in your pocket is starting to feel a little less real. And oh, it gets worse. You want a reliable imported car, something like a Toyota Camry? Forget 30 grand. You are now looking at over $50,000 for the exact same car. All of a sudden, your raise is just getting completely eaten alive at the checkout counter. This changes everything about who pays for the government. See, this is a fundamental shift in how things work. We would move from a system that mainly taxes your income to what's called a consumption tax. It's no longer about how much you make, it's all about how much you spend. And that creates a whole new game with a whole new set of winners and losers. So let's meet the two types of people who are going to have to navigate this new economy. Their stories really reveal everything you need to know about who wins and who loses in a tariff-only America. Over here, we've got Saver Sam. He makes 100 grand a year, and now he takes home all of it. He drives an American-made Ford, eats local, and he invests that extra 25K. But on the other side, we have Spender Steve. He also gets his full 100K, but Steve loves his German car, his Italian suits, and all the latest imported electronics. He loves stuff. So what happens? Well, Sam is absolutely crushing it. His day-to-day expenses have barely changed at all, so that $25,000 raise is real money that he's putting to work in the market. But Steve? Oh, Steve's actually poorer. His cost of living has just exploded. Every time he swipes his credit card on an imported good, he is voluntarily paying an 80% tax. His raise is a complete and total illusion. Now let's look beyond just your personal budget for a second. What does this do to your investments, to your 401k? This is where the story gets really, really chaotic. The stock market hates one thing more than anything else, and that's uncertainty. And this is the definition of uncertainty. Companies like Apple that absolutely rely on global supply chains, their costs could skyrocket, and that could crush their stock price. But on the flip side, domestic manufacturers like Ford or U.S. Steel could absolutely boom, with all their foreign competition suddenly priced out of the market. We'd probably see this massive, messy rotation of capital from one sector to another. But there's another consequence of making imported goods almost twice as expensive. It's one that governments often seem to forget about when they draw these plans up on a whiteboard. You would create a massive, massive incentive for smuggling. I mean, think about it. If a PlayStation costs $1,000 in Canada, but $2,000 in the US,
What do you think is going to happen? You're going to have people driving across the border with trunks full of consoles, creating this huge gray market. The government would have to spend billions policing illegal avocados instead of auditing our tax returns.
So, we have a world with bigger paychecks but crazy expensive stuff, a volatile stock market, and a brand new black market for everyday goods. It sounds chaotic, I know, but believe it or not, there is a clear path to winning. The question then becomes, how do you not just survive, but how do you actually thrive in a system like this? How do you exploit these new rules to your advantage?
This strategy is incredibly simple, almost subversive. Step 1, just stop buying things, especially imported things. Step 2, take all that extra cash from your tax-free paycheck and buy assets, stocks, real estate, you name it. And step 3, sit back and let the spender Steves of the world fund the entire government for you with their luxury purchases. Frugality literally becomes the new tax evasion.
And here it is, the most profound takeaway from all of this. A law like this effectively forces the entire country to adopt the mindset of the financial independence retire early movement, or FIRE as you might know it. It aggressively incentivizes saving and investing while severely punishing consumption. Ultimately, a no-income tax world is a complete paradise for savers and an absolute nightmare for consumers. It's a system that punishes you for looking wealthy while massively rewarding you for quietly being wealthy. So, I'll just leave you with this question. Would you take that deal? Would you trade cheap Amazon packages and affordable imported cars for a significantly bigger tax-free paycheck? Think about your own habits for a second. Are you a saver Sam or a spender Steve? Let us know what you think.